It's growing incredibly fast. I've said for a long time it was the fastest adoption of any technology the world's ever seen. The pace of adoption is ridiculously big. So even if we extrapolate out the trend, in a year's time, we're at 1 billion. Maybe the trend slows. Maybe it's 750 million by the end of 2024. You very soon get to very large numbers, 2, 3, 4 billion people. We are still early, but we're not super early. I would suggest that the cycle that lies ahead that we've started is probably the cycle that I refer to as the everything, everywhere, all at once cycle, where we do see adoption from every angle.
By all indications, 2024 is quickly shaping up to be a breakout year for the cryptocurrency and overall digital assets industry. One need only look at how much popularity the industry has gotten over the past year, despite the bear market, to realize the magnitude of what's coming over the next 12 to 18 months. It's absolutely going to be massive. While we've had lots of discussions about price outlooks, it is now clear that many other factors will contribute to the bull run and the continued growth and development of the entire space. One of those factors is the mainstream adoption of crypto assets, starting with Bitcoin and gradually trickling down to other crypto and digital assets. During a recent interview with John Deaton on CryptoLawTV, Raoul Pal, a renowned macro guru and former Goldman Sachs executive, discusses his outlook for cryptocurrencies as we approach what he says could be the biggest crypto bull run in history. According to Pal, mainstream adoption will be one of the strongest narratives of this cycle. In fact, Pal believes the influx of wealthy traditional finance players will introduce tens of billions of dollars into the industry. These new investment dollars will then be the major driver of other narratives, while also contributing to significant price gains. We will now bring you clips from Pal's discussion with Deaton, a renowned crypto lawyer representing over 75,000 XRP holders. But before we do, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can join the conversation by making your predictions and giving your overall outlook for the industry in the comments section below. Everything you do helps with the YouTube algorithm and contributes to the channel's growth. Thanks for the support and enjoy the video.
Will tokens like XRP or ETH, will they ever decouple from this sort of Bitcoin cycle that we've witnessed?
No, because the Bitcoin cycle is the macro cycle. Don't forget, all assets are going up and down in this 4-year cycle, as is the economy, as are interest rates. It's all due to 2008 and resetting interest rates back to zero, all the major governments around the world. They then issued their debt in this 3 to 5 year sector. So let's call it 4 years on average. And this debt refinancing cycle is the cycle that drives Bitcoin, all crypto, all assets. It's also the presidential cycle. They're all the same thing right now, right? This is this super correlated world.
Yeah.
So within it, the first part, what I call macro spring, which is what we've been in, the early part of a bull market, when inflation is starting to fall, growth is still falling, but starting to try and stabilize somewhere. Normally, that's when Bitcoin outperforms. It's like in the beginning of a bond market rally, it's treasuries that outperform. Then as people get confidence and more liquidity comes in the system, they start taking more risk and it goes further out the risk curve. And that's when the alts start performing. So we're transitioning currently from macro crypto spring to macro crypto summer. So that's what's known as alt season. And
Okay.
it starts with the higher quality tokens first. And then at the end of it in 2025, it's kind of everything goes up ridiculously. The regular macro cycle is exactly as you're saying. Governments want to bribe voters, so they give out as many candies as possible, and that's stimulus. The central bank is involved in this because it has to help refinance the government finance debt. So they do want to get interest rates lower. They're talking a harder game now because I think they want inflation to undershoot, because then that gives them the cover to use the balance sheet, to print money, do all of the things that they do. And that's fine. And that would be a normal crypto cycle. We've seen that pretty much every time we get into the halving year. But we are seeing some bigger dynamics here, which is we could see a huge amount of capital coming in because of the ETF. And because of a lot of people are building on real world assets. You know, we're seeing money transmission mechanism stuff being done. We're seeing new use cases of NFTs. They were new for the last cycle. What are we going to use them for? When Solana can mint 1 million NFTs for $100, well, you can use it for ticketing. You can do all sorts of things we can't yet imagine. And we've got the CBDCs are going to be rolled out in some places within this cycle, which is, again, using the underlying chain and the ongoing growth of stable coins. And we're seeing brands come into the space to use kind of Web3 as a way forward for new business models, which is why I call it the everything everywhere all at once, which means that we could have collective madness where kind of more like the 2017 cycle,
right,
it just goes crazy. Now, even I expected the same kind of finish of the 2021 cycle. I got that spectacularly wrong. But maybe we get it this time around.
While we continue to look forward to the great days of 2024 and 2025, crypto critics are just as excited about bringing everything down. And nobody is looking forward to doing just that than U.S. Senator Elizabeth Warren, who continues to launch attack after attack on the industry. A few days ago, the U.S. lawmaker announced that 5 more senators have agreed to co-sponsor one of her bills aimed at cracking down on money laundering. According to Warren, her bipartisan Digital Asset Anti-Money Laundering Act, which was reintroduced in July, now has the support of 9 U.S. senators, including Republicans and independents, and 3 members of the Banking Committee. In a recent post reacting to Warren's dogged criticism of the industry, Deaton notes that the bill is a big deal, and Warren is the single biggest threat to crypto in the United States. He also alleges that SEC Chair Gary Gensler gets his marching order from the senator. During the discussion with Deaton, Pal explains that the continued crackdown on crypto in the United States is much bigger and deeper than everyone realizes. According to the Real Vision founder, this is all a smokescreen to facilitate the introduction of central bank digital currencies. Here are more clips from the interview.
I think there's multiple attack vectors going on here. One is government, because government has a monopoly on money and violence. And, when you are the world's reserve currency, you're very nervous of making a wrong move. Right? We've seen this repeated. I've written about this on Twitter. After the US left the gold standard, they tried to stop capital flight, had capital controls. So the UK started the FX market, which is the largest market the world has ever seen, because, South Africa wants to trade with the UK and dollars come in the middle. And we're like, well, we need an FX market to trade because we're not using gold anymore. Then it happened with the Eurodollar market because the US banks were not allowed to lend internationally. So the UK started the Eurodollar market, became the largest market the world has ever seen. Happened again with derivatives. They wanted to protect the CME and the CBOT. So they're like, we're not going to let the banks have regulatory cap availability for OTC derivatives. So London started the OTC derivative market. The swap market was first, became a $1.4 quadrillion market. So we've got a history of the United States being cautious around these things and eventually catching up. So that's what I think Liz Warren there's some nervousness around that. There then is just votes. World is pretty polarized right now.
Yeah.
And one of the ways this polarizes people is young people vote for crypto. So they're much higher, 30% of millennials will own crypto. Of the baby boomers, much less. Liz Warren is a poster child for the baby boomers.
Right.
So she's trying to get votes, which is the we fear change crowd, which is the older people who like, I know what I know and I like what I like.
Right.
So I think it's political, and it's also out of fear over control over money. And the US has control over money, and it can sense that something's changing, even though stable coins have actually made it more dollarized.
Right.
The banks, from as far as I'm aware, forget what Jamie Dimon says, because he's got a monopoly basically of banking, but all of the banks know that blockchain technology is the solution, every one of them, and they're all working on it. So they're not really fighting us at all. They're just shit scared of Liz Warren and Gensler. Right. That's the real problem here, is they can't move forwards. Do you think Goldman wants an OTC trading desk for crypto? Of course it does, but it's still worried about what it can do. The asset management firms haven't been able to create products because they don't know who's going to get sued. And so that's the issue here, is for some reason, Liz Warren has been given control over the financial system by Biden, and Gensler is her puppet. I think actually what they're trying to do is slow it down.
Yeah.
Because if they accepted it too fast, it's like kindling, right? As we know. And we saw the same in China and India and the EU. Is they're like, okay, first we need to understand what the hell this is. Second, and this is a thing that most people won't like. Second, we need to figure out our central bank digital currency. So then we can know where the capital is going. Because if central bank digital currency is on blockchain rails, then you can see the connection as it goes onto the distributed ledger systems.
Right.
China did that. They closed, converted to a CBDC essentially, and they will reopen for capital flight. They're reopen via Hong Kong because now they're in control of the money. They can see where it goes.
Right.
Blockchain's a gift for them because they can see the dollar that John spends. They can see exactly where it goes around the system. Yeah. Now, they may not use it against you. It may be amazing data that we can analyze economies with. There's many things, good things that can happen. There's many bad things as well.
For years, every participant in this industry fantasized about widespread acceptance, not even adoption of this asset class. Developers wanted their work objectively viewed, without the many negative labels that have been attached to crypto assets and related projects over the past decade or so. And now, we have the chief executive officer of the world's largest asset management firm, not just talking about the importance of the cryptocurrency industry, but also describing the superiority of digital assets over the extremely uncertain world of fiat currencies. We probably won't even appropriately appreciate everything that has happened over the past year until we look back at this moment a few years from now. Whatever tricks the Elizabeth Warrens and Gary Genslers have left up their sleeves, this is happening. The technology is here to stay, and there's absolutely that can stop its development. Can they delay it? Maybe, but they cannot stop it. What are your thoughts on Raoul Pal's predictions and overall outlook for the cryptocurrency industry during the bull run? Do you think Elizabeth Warren's suppressive and highly deceptive bill against crypto passes? Please share your thoughts, comments, and observations in the comments section below. Also, ensure you subscribe to the channel, turn on post notifications, and check out our other videos featuring Pal and other prominent personalities in the cryptocurrency industry. Thanks for watching.
Hey Savvy Finance enthusiasts, massive shout out for being the heartbeat of Savvy Finance. Your support has been the wind beneath our wings, and we can't express our gratitude enough. Now buckle up because we've got an exclusive deal just for you. Ever wanted a slice of the action? We're offering a golden opportunity to own part of our YouTube channel's potential future revenue. This isn't just an investment, it's an invitation to be a part of our story. Investing means you're not just an investor, you will be a participant in the future of Savvy Finance. No cheesy lines, just a genuine call to embark on this journey together. But wait, there's more. Your mission, should you choose to accept it, become a Savvy ambassador. Share our videos on every platform. Facebook, Twitter, LinkedIn. Your shares amplify our visibility, potentially translating to more views and more YouTube revenue. Here's the kicker. If our viewership increases, we would not be just growing financially. We would be making a tangible impact by spreading valuable financial education. Now the icing on the cake. Invest and you'll score exclusive access to our private Savvy Finance Discord. Here you can chat with Savvy Finance, swap ideas with fellow investors, and be at the forefront of exciting developments. Click on the link below to register your Gigastar account. You can also find the link to my offering page in the description below. Get your Gigastar account ready, review the offering details, and let's embark on this thrilling venture together. To the incredible Savvy community, thank you for being the backbone of our success. Your journey is my journey, and together, we're creating waves. Cheers.